Thousands of people are about to wake up significantly wealthier than they were the day before. That sounds like the beginning of a lottery story. But it isn't. It's the story of what can happen when one of the most valuable private companies in history eventually opens its doors to public investors. And it raises a fascinating question. Can an ordinary person still benefit from an opportunity like this, or is the wealth already spoken for before the rest of us even get a chance to participate? My name is Theo, and I spend way too much time thinking about why some people end up capturing enormous gains from wealth-creating events while most of us only hear about them after the fact. If you've ever watched a company you admire go public and felt that frustrating sensation of, I should have been able to benefit from that too, then stay with me and hit that subscribe button because today we're going to explore something genuinely fascinating. We're going to break down how thousands of people could become dramatically wealthier if SpaceX eventually launches what could become one of the biggest public offerings the world has ever seen. But the real story isn't just about SpaceX. It's about how wealth gets created, and why understanding that process may be more valuable than any single investment opportunity. For years, SpaceX has occupied a strange place in the financial world. Almost everyone knows the name. Millions have watched rockets land vertically on floating platforms in the ocean. Millions more use Starlink internet services in places where traditional broadband barely exists. Yet despite being one of the most recognizable companies on Earth, most people cannot simply open a brokerage account and buy shares. SpaceX remains a private company. That means ownership is limited to employees, early investors, venture capital firms, private funds, and certain institutions. And because it has remained private for so long, something unusual has happened. The company's value has continued growing behind closed doors. Over the years, private funding rounds have assigned increasingly larger valuations to the business. Every time a new round occurred, investors paid higher prices. And every time that happened, people across Wall Street paid attention. Not because SpaceX is another technology company, but because very few businesses in history have combined aerospace, communications, satellite infrastructure, defense contracts, and global internet services under one roof. That combination is rare, and rare assets tend to attract extraordinary interest. This is why speculation around a future SpaceX IPO never completely disappears. Investors understand that when a company of this scale eventually reaches public markets, it becomes more than a financial event. It becomes a historical moment. Think about what happened with Google. Think about Facebook. Think about Airbnb. Those offerings didn't simply create headlines. They created new groups of millionaires. They transformed employees into wealthy shareholders. They rewarded investors who believed years before everyone else noticed. And that brings us to the first group of people who could become significantly wealthier if SpaceX eventually goes public: the employees. Imagine joining a company when it was still proving itself. The office is smaller. The future is uncertain. Long hours are normal. Success is far from guaranteed. Instead of receiving all compensation in cash, part of your reward comes in stock options. At the time, those options may not seem life-changing. They're simply pieces of paper tied to a company that might succeed, or might fail. Many employees at successful companies have stories like this. A software engineer joins early. An operations manager stays through difficult years. A technician accepts stock instead of a higher salary elsewhere. Then a decade passes. The company grows. Revenue increases. New products launch. Customers multiply. And suddenly those stock options are worth hundreds of thousands or even millions of dollars. The fascinating part is that most of these people didn't become wealthy overnight. Their wealth came from ownership combined with patience. That's a lesson investors often overlook. Wealth creation frequently looks boring while it's happening. It's only exciting when people look backward. The same principle applies to early investors. Years ago, some venture capital firms wrote checks to SpaceX when the future was far less certain. Today, those positions could be worth many times their original investment. Institutional investors, private funds, and certain accredited investors have also gained exposure over the years. If a public offering eventually occurs, many of these stakeholders could see enormous increases in liquidity. Their shares may have been valuable on paper for years. An IPO can transform paper wealth into accessible wealth. And that transformation is where the headlines often come from. But how exactly does an IPO create millionaires? The answer is surprisingly simple. Before an IPO, ownership is concentrated among a relatively small group of shareholders. After an IPO, ownership becomes available to the broader investing public. When demand exceeds supply, prices can rise rapidly. Imagine a company valued privately at one level. Then millions of investors suddenly want exposure. The available shares remain limited. Demand increases. Prices adjust. That's basic economics. Sometimes dramatically. History provides remarkable examples. Google's public debut introduced investors to a company that would later become one of the most influential businesses ever created. Amazon's public offering occurred long before it dominated e-commerce and cloud computing. Facebook entered public markets amid enormous attention and skepticism. Airbnb faced uncertainty during one of the most challenging periods in travel history, before ultimately becoming one of the most talked about offerings of its era. Tesla provides another fascinating case study. For years, many investors dismissed the company. Others saw transformational potential. The difference between those viewpoints created one of the most debated investment stories in modern history. Yet IPO wealth creation isn't as simple as buying on day one and becoming rich. There are rules. There are lockup periods. There are restrictions. Many insiders cannot immediately sell their shares. These lockup periods are designed to prevent massive selling pressure right after the company becomes public. Eventually, however, those restrictions expire. And that moment often creates another important chapter in the stock's journey. Sometimes prices rise. Sometimes they fall. Sometimes investor expectations collide with reality. Which brings us to the reason so many investors are excited about SpaceX, specifically. At its core, SpaceX is not just a rocket company. That's where many people stop thinking. But investors think about businesses differently. They think about cash flows, revenue growth, competitive advantages, future opportunities. SpaceX has built a dominant position in launch services. Its reusable rocket technology changed industry economics. Launching payloads became more efficient. Costs decreased. Capabilities expanded. But the story becomes even more interesting when you consider Starlink. Millions of people worldwide live in regions where traditional internet infrastructure is limited. Starlink offers connectivity through a rapidly expanding satellite network. Every new customer potentially adds recurring revenue. Recurring revenue is something investors love. Not because it's exciting, because it's predictable. And predictable revenue streams often receive premium valuations. The long-term possibilities extend even further. Commercial space activity continues growing. Satellite demand continues expanding. Global connectivity remains a massive opportunity. Whether all of these opportunities translate into future profits remains uncertain. But investors are clearly intrigued by the possibility. And whenever possibility combines with scarcity, markets pay attention. Still, there is another side to this story. The side that receives far less attention during periods of excitement. Valuation. A great company can still become a disappointing investment if purchased at the wrong price. That statement may sound strange. After all, if a company is extraordinary, shouldn't it always be worth buying? Not necessarily. Imagine purchasing a beautiful house. The house itself may be wonderful. But if you paid double its reasonable value, your future returns become less attractive. Stocks work similarly. Investors often become so focused on the quality of a business that they forget to consider the price they're paying. This is especially common during highly anticipated IPOs. Excitement grows, media coverage expands, stories spread, and expectations climb higher and higher, sometimes higher than reality can support. History contains many examples of companies entering public markets with tremendous enthusiasm only to struggle afterward. Not because they were bad businesses, because expectations have become unrealistic. Another risk involves lockup expirations. When insiders eventually gain the ability to sell shares, additional supply enters the market. That can create volatility. Then there is investor psychology, perhaps the most underestimated risk of all. Human beings are emotional creatures. We fear missing out. We compare ourselves to others. We chase momentum. And occasionally, we convince ourselves that every great story must also be a great investment. Financial history repeatedly demonstrates that these assumptions can be dangerous. Which leads to the question many viewers are probably asking right now. How can ordinary investors participate if a SpaceX opportunity eventually arrives? The first possibility is participating directly in the IPO. The advantage is obvious. Potential access before widespread trading activity influences prices. The disadvantage is equally obvious. Many retail investors never receive meaningful allocations. Demand often exceeds availability. The second approach is waiting until shares begin trading publicly. This option offers simplicity. Anyone with a brokerage account can potentially participate. The drawback is that early trading can become extremely volatile. Prices may surge. Prices may fall. Emotions tend to run high. The third possibility involves secondary markets before an IPO. Certain private market platforms sometimes facilitate transactions involving private company shares. However, access is often limited. Requirements can be restrictive. Risks can be significant. This path generally isn't suitable for everyone. The fourth approach involves indirect exposure. Some funds or companies may already hold positions connected to SpaceX. Investors occasionally gain partial exposure through these vehicles. The advantage is diversification. The disadvantage is that exposure may be diluted and indirect. Each approach serves a different type of investor. And that's important because investing is rarely about finding the perfect strategy. It's about finding the appropriate strategy for your goals, risk tolerance, and time horizon. Now let's talk about the biggest mistake investors make during opportunities like this. FOMO, fear of missing out. FOMO has probably destroyed more wealth than recessions, elections, or market headlines. Why? Because it encouraged people to abandon discipline. Someone sees a stock rising, friends start talking about it. Social media celebrates it. News coverage increases. And suddenly the question changes. Instead of asking, is this a good investment? People start asking, what if I miss it? Those are very different questions. One is rational. The other is emotional. And emotional decisions often become expensive decisions. A wonderful company is not automatically a wonderful investment at every price. That distinction separates speculation from disciplined investing. The smartest investors understand something most people don't. They know uncertainty never disappears. There is no perfect moment. There is no guaranteed outcome. There is only probability. They focus on position sizing, risk management, patience, long-term thinking. Some use dollar-cost averaging to reduce timing risk. Others wait for opportunities created by market volatility. Many avoid concentrating too much money into any single investment, regardless of how exciting the story appears. Most importantly, they understand that building wealth is usually a marathon rather than a sprint. The irony is that people often search for life-changing investments while ignoring the habits that actually create life-changing wealth. Consistent investing, reasonable diversification, patience, ownership, time. Those principles sound less exciting than rockets launching into space. But history suggests they are far more reliable. So let's return to our original question. Could you become wealthy because of SpaceX? Possibly. Some people certainly will. Employees who stayed for years. Early investors who took risks when success was uncertain. Future shareholders who make wise decisions and remain patient. But the deeper lesson isn't really about SpaceX. It's about understanding how wealth gets created in the first place. The biggest fortunes are rarely built by finding perfect opportunities at perfect moments. They are usually built by recognizing extraordinary businesses, acquiring ownership, and holding that ownership long enough for compounding to do its work. SpaceX may eventually become one of the most important investment stories of its generation. Or it may simply become another reminder that great companies and great investments are not always the same thing. Either way, the opportunity will eventually force investors to answer an important question. Will you approach it with excitement alone? Or with patience, discipline, and a long-term plan? I'd love to hear your perspective. If SpaceX eventually goes public, how would you approach the opportunity? Would you try to buy during the IPO, wait for the market to settle, seek indirect exposure, or stay on the sidelines entirely? Let me know in the comments below, and if you enjoyed this analysis, subscribe for more conversations about investing, wealth building, and the financial stories shaping our future.